Okay, welcome back. In this section we're going to talk about our compounding example. Since we've already talked about how to plan for your training period, your first 6 months, and then work into a full-time trader type of income, let's put some faces to the numbers here. We'll take a look at a bank, which is simply what you're starting with here, your starting capital. A monthly income, or a monthly return. Here we're going to use 15%. Then we're going to talk about profit per month, break it down per day, and then we'll talk about what I call the 50% rake. This is a number which you can use to give yourself a paycheck, and it's very, very important that you do pay yourself. In fact, in the beginning, when I stopped trading through the firm, I would actually have my broker send me a physical check. That way I had the physical check in my hand, and it really did feel like I was getting paid. I think all of that is very important, and psychologically is very important. So what we're going to do here, let's go ahead and look at some of the numbers. So here we're going to have $10,000 as our starting bank. And then what we're going to do is take 10,000, 10,000, that cell times 115%. That's going to give us our number. Now the profit per month is simply going to be that number, equals this cell minus that. So we're subtracting our profit, our total profit from our initial bank, and that'll give us our profit per month. Now profit per day, what I'm going to do is use a 20-day month. You may trade more, you may trade less, but in any rate, it'll give us a good example of an average daily profit. So we'll go ahead and take the profit divided by 20. And then the 50% rake is simply going to be our monthly profit divided by 2. Okay, now I'll just copy these cells down. Oh, this cell here, this is important. It's going to be our total profit minus our rake. Remember, you have to subtract it out so you know at the end of the month how much money is going to be staying in your account. So we'll go ahead and copy this down. We'll take a look at 24 months first, or 2 years. And we'll copy this one down, copy these two, 24 months, and then our rate. Okay, and what I also want to do, just to give you an idea of how much you're talking about cumulative, let me go ahead and we'll add up all of these numbers here so we can see how much at the end of 2 years. You could, of course, get it from subtracting. You could get it from this number, but it's so much easier just to look right here. So let's take a look here. We're starting with our $10,000 bank. Now, this is very important. These numbers are assuming that 15% is made every month. No more, no less. So these, again, are just hypothetical examples of what would happen if you made 15% month in and month out. Here's your profit. You can see that the monthly profit starts out at a modest $1,500 and then grows very quickly inside of 24 months to where you've got $6,850 in total profit. And this is where you can see the daily figures start growing to just under $350 per day. And then the monthly income, the monthly paycheck, gets to be about $3,500. So up to month number 24, the total profit that you've taken out, okay, that's just what you've taken out. It's not the total profit. But what you've taken out is going to equal just about $40,000. You can see here, $39,000, just over $39,000.